So hello to everyone, welcome to the weekly wrap-up video. So just going to take a quick summary and recap of what we've seen this week before we head into the Christmas period. So then in terms of this week, has been dominated by US fiscal cliff discussions. Now earlier in the week we did see quite a bit of pricing in, a lot of optimism that some sort of deal could be agreed between the Democrats and Republicans. However, this completely reversed overnight following the news from Boehner that he'd pulled his Plan B. That was meant to be voted in the House, but he didn't have enough support. So we saw E-mini S&P fall around 50 points, we saw Dow Jones, the E-mini, fall around 150, a lot of risky assets suffering from this new news. And we have recently seen Boehner on the wires, however no further insight into the situation. So it looks as though there'll be no deal before Christmas, and also it seems unlikely we'll have a deal before these automatic tax hikes and spending cuts come into effect on December the 31st. There's a chance that the House and Senate could reconvene after Christmas around the 27th, however little expectation of any deal. Now in terms of the consequences for this, there'll be a limited reaction on the 1st of January following these automatic moves. However, the main risk impact, or the main event to look out for, could be any sort of rating action from the major rating agencies. They have all implied that they could indeed cut the US sovereign rating following no agreement at all. Now that's been the main driver and will continue to be over the next couple of weeks. Now we are closed for the Christmas period, largely in Europe and the US, for the first half of next week. However, markets are open in the latter half. But in terms of the other side of the pond, we have seen Greece, they were upgraded at Standard & Poor's following that debt buyback, so that means there's more collateral eligible at the ECB for them to access liquidity. And we've also seen the Bank of Japan this week, so following pressure from the new Japanese PM Abe, they did indeed boost their asset purchase target to 101 trillion. So that was a boost of 10 trillion, largely as expected, not too much reaction there in terms of the yen, was again largely priced in. Other than that, in terms of data points, we've had the US GDP was a surprise, came in higher at 3.1%, expectations was for 2.8. It's quite a revision from the first reading, so to recap, first reading was at 2.0, then it was revised to 2.7 at the secondary reading, and again then up to 3.1. However, limited market reaction as those fiscal cliff talks did continue, and those tax hikes, they're looking to be pretty soon in the next 10 days or so. We've also had UK GDP, that was today, slightly lower revision to 0.9% from 1%. And we've also had the Bank of England minutes this week. Nothing particularly exciting out there, no market reaction. As expected, 8-1 vote split in terms of boosting the APF, with Miles dissenting yet again. But for the time being, that is enough from me. Hope you have a great Christmas and a brilliant New Year. The desk will reopen on the 2nd of January, so look forward to seeing you then. But in the meantime, have yourself a great holiday.